Hey, what's going on, everyone? It's Wizard Sleeve here, aka Jake Marks. I thought I'd drop a video for you guys. Um, First one I've ever done, so I cut me some slack if I'm a little bit dusty behind the mic. I may sound awfully boring, bit of a monotone voice at the moment, but I'll try to keep it as enthusiastic as I possibly can. Um, yeah, I'll try have a discussion on how to form a trade idea. So that's working down from the daily chart to the 4 hour, the M15, and then we'll find some entries on the M1, M3, and M5. Those are the time frames that I use, and I do not think I'll be deviating from them, as I have seen an incredible amount of consistency in the past from just using those time frames. So if something like works right, you just might try to fix it, or just stick to it. So that is what I do, and that is what I'm going to show you. So, forming a trade idea. Now, how to form my trade idea? Well, everyone's different when it comes to this question. Some people trade indicators. Everyone has so many different, there's thousands of strategies that people trade, and there's certain confluences that one trader may need for them to enter that another trader would just completely oversee. So everyone's different, but I'm going to give you my take on how I analyze the market, and hopefully you can gain some value from that. I'm heavily influenced from structure. Structure is king, in my opinion, as that is what you see printed by the candles. No indicators, no nothing. Structure is clearly evident on the chart, and it is blatantly showing you whether it's bullish or bearish. But in saying that, structure can be mapped very incorrectly, very easily. So it's very important that you establish or you backtest and data gather um, ideas and ways for you to just benefit your structure mapping. And there is multiple ways to do that. That is just spending hours and hours and hours on the charts and seeing what works and seeing why and why it didn't that work structure wise. That I'm not going to go into too much depth about that. I'll leave that for you to do, but I'm just going to show you how I do it. So, how to form a trade idea. I'll go to the daily chart. I'll see where we are in the daily chart. See where we are in terms of a bullish. So I'll firstly go to the daily chart whenever I open up my trading view. If I'm obviously on it every day, you can determine where you are. You don't really need to check the daily every single day, but at least a few times a week just to see where we are, just to see how the previous day's candle was closed. It's always good just having that in the back of your mind. But the daily chart, that is the first thing I look at to see whether we're bullish or bearish, and then I'll slowly work my way down. And then I'll go to the H4. And that is where I will see, because I am currently an intraday trader, and you can argue somewhat of a scalper. H4 chart is my bread and butter in terms of structure. So that is where I will determine if I'm bullish on the H4, but I'm bearish on the M15. That to me is telling me that we are currently in a pullback. to mitigate the lower part or the extreme of that current H4 range. And that's where the orders will be stacked to accumulate more long positions. I follow order flow. I don't try to predict, or I just try to react. And I'm not going to trade against structure at any moment because I've done that in the past and it burns me 9 times out of 10. So the best thing to do is just ride the wave and follow the big fish. So H4 chart, structure mapping to determine intraday bias. And then for the next one, I'll go straight to the M15. And that is, I use the M15 a lot. That is, in my opinion, like the best time frame for intraday. It's very powerful, and mapping it on structure, it really does help if you get it correct. So the M15 chart determines whether we are pro trend or in a pullback within the what's going on here? We are in a pro trend or within a pullback within the H4 range. So that will be my third point of my trade idea, formulating a trade idea. And then from there, this is where I map my POIs, which supply gosh, it's like I've never taught before. Supply and demand zones on the M15 and H4. And those are my areas where I'll be looking at price to enter, and then that's when I hop down to the lower time frames and scale my entries, which are usually on the M5, M3, and the M1. You can use the seconds. I used to use the seconds for a bit, but I'm happy using the M1. There's still plenty of opportunities in the market, and there's still plenty of opportunities you can see on the M1. Sure, like it looks dope for fucking IG and whatnot on the seconds time frame, and your penis grows an extra 2.5 inches every time you get an entry on them. So, fucking kudos to people that do that. But I'm happy just cruising, eh? So we'll start here. The daily chart. How to form a trade idea, daily chart. See where we are in terms of bullish or a bearish phase. So as you can see here, let me just make that a little bit smaller. It's probably a bit too small. If I'm going to map structure a little bit, I'll do it now. Let's start from up here. See, we broke bearish here with a candle body closure. Once we close below that low, that indicated to me that this is our new form swing high and a yet to be confirmed swing low until it breaks. So once we get the break below that again, our swing high is confirmed, and this is our new price range from this high to this low. And as you can see, price comes back up mitigate something within the EQ of that range before breaking structure to the downside again. So it's important to look at price in a way of buy side price delivery and sell side price delivery. It's made it very, very easy for me to understand. I just look at it as in the buy side of the curve and the sell side of the curve. I got that from ICT a long time ago. It's got plenty of free content on YouTube. I advise you to look at it. It just really simplifies it in a way. So if you are currently bearish on the daily and we have just had a break of structure, like a bearish break of structure, that would be the sell side of the curve. And what you can anticipate if you are following order flow, which is bearish, you can anticipate an initiation and a commencement of a pullback, which would be classified as the buy side of the curve. And then following bearish order flow, you can expect areas where price would tap into to mitigate, and then that would be enough accumulating orders there to push price lower, and thus creating the sell side of the curve of the new range. So when we zoom in here, we can see that we are clearly bearish on the daily. This would be our swing high. If that will actually, yeah, that's our swing high. And this is our yet to be confirmed swing low, but I'll put that there for keepsake. So this is our price range on the daily. That is what we are trading within, and we are currently bearish, following bearish order flow. So what we can expect once we have had our sell side of the curve, we can expect a retracement, initiation, pullback, however you want to put terminology to it, but that will start the buy side of the curve. So we've ticked off this one. We understand that we are, it's dodgy. That's meant to be a tick. We understand that we are bearish currently, and this is where I'll go down to the H4. If it wants to let me. Okay. So now we are in the H4. So let me just clean this up a little bit. Stuff gives me mad OCD. Swing high, yet to be confirmed. Swing low because we haven't broken anything. H4 chart. So this is where we are structure mapping to determine our intraday bias. So here we will map structure on the H4, and this will work in conjunction with the daily chart. So if we are bearish on the H4 and we're bearish on the daily, you can assume that we are pro trend, and shorts should be considered. You should definitely not be long in that, because that is pretty much trying to catch a falling knife. Its high time frame outweighs lower time frame. So longing in a bearish cycle, which is on the daily chart and the H4, it's only going to end bad. But so we'll start here. This is our H4 bearish break of structure, and some would argue that this would classify as a swing low, but to me that just kind of looks like a bit of a pause. I'm also like to see this type of bullish action. So I'll classify that as a swing low, and then that gets traded through, thus creating the swing high. And that is how I would look at price. So you can argue this here, this one here. Some would definitely say that would be a swing low. and then that gets traded through. So we'll do it for keepsake anyway. So let's just say that this is our swing low, and this becomes our yet to be confirmed swing high until it is traded through, which it is. And now we are currently trading within this price range on the H4. So we are bearish on the daily. We're bearish on the H4. So now we have identified where we are in terms of structure on the high time frames. Now it's time to go to the M15 to determine where we are on that time frame, and then that's where we can derive a trade idea. I think that low was here. Yeah. So that is our H4 low. Sorry. That is our H4 low. And then now we will map our M15 structure. It's current trading range. So this is the sell side of the curve. And then if we were to continue bearish price action, this will be the sell side of the curve, then followed by the buy side. Come up to the extreme or the EQ of the range, mitigate something around here, you would assume, and then to continue the sell-off. But here I'll map my M15 structure, which will start at here. So this low fails to close below that one. So this is our current price leg here. And then we break above that, signifying this to be our new swing low, that to be our yet to confirm swing high. And then this is all internal structure here. And then we close below that low there. So yeah, that is our M15 range here. And then I'm going to zoom in. With that close, we get a retracement, which is just below 16 pips. That is enough for me to consider as a structure on the M15. So we are bearish now. So we're pro trend to the H4 and the daily. So shorts are considered. This would be our current price leg here. But then as you can see, we break above here. So once we get this break and close above the M15 level, you can assume now that we're still bearish on the daily. We're still bearish on the H4. We have just had a H4 bearish break of structure, and what to expect after break of structure, a pullback. So, which would be the buy side of the curve. And then, as you can see here, we've broken bullish on the M15. So that, to me, is that's our initiation to start this bullish pricing to mitigate somewhere within this premium. But you don't always need to wait for M15 structure to change. Sometimes you can just wait for change of character, which is when price takes a low and then takes a high, indicating bullish intent. And that is a very, very powerful confluence to have. And it's very, very, it's very good. I won't go into depth about that. I'll let you figure that out on your own. But as you can see here, we're bullish now on the M15, so we can consider taking long positions. It's all going to be pullback trading, so I won't be targeting swing highs or highs in general. my targets would be at relative areas of supply because we are currently bearish on the H4, bearish on the daily. We've just switched bullish on the M15. So we can assume that we are now in a pullback and short-lived. If we were pro-trend, I would target weak lows and or weak highs, determining like whether you're bullish or bearish. But okay, so now we've broken bullish on the M15. This is where I'll go back to my little note. Let's just make that nice and small again. So bullish on the M15. We've knocked off daily chart, H4 chart, M15. We've established our order flow. We have established our structure and we've mapped it correctly. And now this is where I map my POIs, which are supply and demand zones on the M15 and H4. Considering we've just broken bullish on the M15, that has told me that an injection of liquidity has been introduced into the market, and this is where they leave their footprints. And if we are to continue bullish within this H4 price leg, they're going to want to come back and mitigate and offset orders and to continue their long positions. So how I would map my POIs would be sell to buy ranges, because we are bullish at the moment, and they aren't just any sell to buys. There's certain things I look for, which are supply and demand flips, and that is when price is, say, here, for example. We are trading bearish on the M15, and every time we break a level, we end up creating a supply zone. And what price does, it comes back up, mitigates that supply zone, and then continues lower. So when there's a flip, right, what a flip essentially is when there's a supply zone, say for example here, the price comes and trades into it, there's a strong reaction, so orders are introduced. So for this example, sell orders are introduced into the market to push price lower, but the buy orders outweigh the sell orders, so demand overpowers supply, and the shorts are squeezed and the longs are overpowered. No, let me rephrase that. The longs overpower supply. So this would be a valid area of supply. We indicate that to be that wick there. As you can see here, price comes up, reacts to supply. It trades below that level, but I would call that more of a liquidity grab because we failed to close below this previous swing low. And in turn, this is where buy orders were introduced, and we've had aggressive reaction out of that area. And this was the point of invalidation right here, because this is the last swing low which broke this previous supply, thus creating the flip. So once I've seen all of these play out, so we've had a M15 bullish change of character, we've had an M15 supply flip, and which initiated the M15 bullish break of structure. This is where I'll go down to my lower time frames after I've mapped out my areas that I want to trade from. And before I do that, my areas I target would be relative areas of supply, which would be here, all within this current H4 price leg. Let's just go here. And all my POIs are flips, just FYI. Every single POI that I ever use is based off a supply or demand flip. In my opinion, they're extremely powerful because that is where a battle went on within the market, where supply and demand were, I guess you can even call just call it a battle, because one shows its hand and the other gets liquidated. So in this instance, demand overpowers supply, thus having a bullish break of structure. So once we've had this break here and we've created this high, yet to be confirmed as a swing high, this would be my first target if I was to be entering any trade within this price leg here. So now we've had this buy side of the curve. Now what we're looking for is the sell side of the curve before continuing longs. So within this area here, I'll go down to the M5 and just scout certain entry criteria. As you can see, we've created this low, we've broken below that low here. We've failed to close, or we do close here. So that will be our new minor high. And then it just goes into an awful range here. But then as you can see here, we get our change of character. So this high takes out this low, but then this low takes out this high. Sure, it's like takes its absolute sweet time to get there, but this is where the injection of liquidity came into the market, and that was enough for it to break this previous high. So that to me is showing that demand is currently overpowering supply still. We are in high time frame mitigation. So everything's starting to line up. So this is when I navigate through my time frames. So we've had our change of character, and then we could just start framing ideas based on this. And this is where I would target minimum, because this high would be deemed weak because we are currently bullish on the M15. So this will be a weak high, and I'll classify this as a strong low because I follow order flow and I'll never deviate from that. So now we've broken internal structure to the upside. Offer high time frame mitigation. It's safe to say that we can look for longs, and those areas I will choose purely based off previous reactions to supply. So as you can see here, I'll go back to the M5, might be a little bit clearer. Wow. So got our supply range here. We have our supply range here. We get a reaction to it. We fail to create a new low, and in turn, buy orders are introduced into the market, and we push price higher, trading through this supply range, thus creating the supply to demand flip. And that is where I'll be starting to trade aggressive when I see those types of occurrences happen within the market. Where are we now? So on the M1, you just follow the order flow. So this was the flip here, but as you can see, price, it failed to come back down and mitigate anywhere within this demand range. But as you can see, we've had a slight mitigation to this whole sell to buy range here with this sell to buy candle here. So once we trade above that, I'll definitely classify that as a strong area, like a good POI to trade from to continue longs. And especially the fact that we have this structural liquidity to induce on mitigation. I classify structural liquidity, not just any low or high. It has to break something. So this low breaks this high, right? and then you would deem this low in conjunction with that one as equal lows. So that's another clear indication of liquidity, and I look for that before entering a market. It's just an added confluence that I have. It's part of my plan, and that's how I do it. So upon mitigation here, where you take out this inducement, that's the fuel to go long. You can see here when we come into this POI, price creates supply as we break a previous low, thus creating supply. Price trades lower, come back up, we have a reaction. We failed to create a new low, so we failed to break this previous minor low, and in turn we end up breaking, not closing, but we wick above. So I will happily trade wicks when it comes to flips and change of characters. I will happily trade wicks because that is telling me that there is unsustained orders in the market to keep price from going in its intended direction. So for this example, if true supply was in the market, this supply range should be protected. This high should not, price should not trade above that high. There should be enough orders in there to be sustained and to push price lower. But considering we tapped into a high time frame mitigation, we've liquidated these lows here. We're currently bullish on the M15, and then we see this entry model play out. I will happily hit that any day of the week. So once we get that trade through here, you can aggressively place a limit on the last sell to buy. And some would cover this low here, like the whole flip. But I'll happily just cover the low here. You can get a 2 pip stop with that. That's perfect in my opinion. Sometimes price likes to trade below the actual flip POI, so liquidate that low. So it'll use that as fuel to go long. I've seen that happen, and it's happened to me plenty of times. So now that we've been tapped into the trade here, your target, well, as I said previously, my target would be I would take profits. I'll take partials at the high that the week high, at the previous week high, and then I would full TP at this high here. Because considering we're trading in a pullback, I don't need to be greedy, right? If I was in pro trend, I'll target the swing low or the swing high, but because we're in a pullback, it's better just to take your partials and take your profits and go on with your day, like you banked. So yeah, that's exactly how I would formulate a trade idea. That one there, it's a 7.7R with partials. You'd probably be like taking off half of that. But there's so many areas here that you can trade as well. I'll just go over it. Let's just make this a little bit less. Okay. So yeah, you can just keep running price through. Like if you have a target set in mind, so say we're targeting this high here, let's just put a line across. So we're targeting that high. We're in one position currently. And if we're confident and in our trade idea and our narrative, we can just keep stacking orders. So as you can see here, when price comes down to this sell side of the curve here, we fail to create a new high, but then price comes down and we mitigate into this extreme of this current range, and we trade through that. So that would be this whole buy to sell range would be a demand to supply flip, as you can see here. So you would classify that as a valid area of supply as well. So like we were playing off this M1 supply, like the lowest one, and that has played out. But this is where you can catch continuations. You just need to look left and see what's above. You can refine it to here if you want. It's probably better, it looks better, it's cleaner. So you can refine it to the extreme of that buy to sell range. So when price comes there, you've got the narrative set, you've put in the intention, you've entered a trade long, and you're happy to risk more capital in a continuation trade, because we are currently bullish on the M15 and we are trading a pullback. We have a target, which is this week high, this M15 week high. So just keep on hitting them. So as you can see here, price comes up, we tap into the extreme of this buy to sell flip. And this is where we see another interaction from supply and demand. So we trade into this supply zone here. We have a reaction. So sell orders are introduced, but they are unsustained as buy orders outweigh sell orders. So demand overpowers supply, and we break through, thus creating another flip. And that would be another POI that you would want to be interested in. So as price, we break this high here now. So we break this minor high. We are breaking internal structure bullish. So why would you want to be shorting in that without any clear confirmation that the bearish trend is underway? So we're taking out this internal structure high. We're bullish on the M15. We've come off a high time frame mitigation, and we've had all our entry criteria play out: the M1 chock, the M1 supply to demand flip, and now we are currently seeing bullish intention. And now we have derived another trade idea based on this information here with this supply to demand flip. So once we see price come into that zone, we can trade aggressively with confidence that we are to continue longs. So as you can see, price comes down, we tap into this zone, we get a mitigation. This is where you got to look at your ranges and where you are currently, like in this internal structure. So this would be currently our supply, right? That's currently our supply range. Price comes down, we tap into it here, we mitigate supply, and then if true supply was in the market, we should have no problem in breaking that low, right? So we failed to do so because we're coming off another POI, which is coming off a high time frame mitigation. So demand is clearly in control. So as you can see, we failed to create a new low. Let me just do this now. Failed to create a new low, and in turn, demand overpowers supply, and then we take out this supply zone here, thus creating another flip. So this will be another supply to demand flip. And then this is where it can get pretty intricate, because this will be a whole range, right? Like you're not going to just put your entry above here, because this is the whole flip, this whole sell to buy range. You don't need to put your entry right here and have, what would that be? Like probably like a 8 pip stop. 5.8 is actually not too bad, but even if you wanted to be conservative and cover that actual low, you're looking at like a 7.5. I'm not really about that, but like kudos to you if you are, that's fine. I'm not judging that. But this is where you can go into a little bit of refinements. So instead of using this whole sell to buy range, you just go down to the nitty gritty supply ranges and demand ranges in here. So this is where you can get internal flips within flips. So you'll classify this as supply. This is be probably more clear in the seconds time frame. So you'll classify that as supply because price comes down, it bottoms out, we have a retracement, and then we break through that. Thus, this would be a low, and then this would be an internal structure high. So therefore creating supply. And once price comes back into that range, we have a mitigation. The sell orders are unsustained. Demand overpowers supply once again upon this mitigation, and then we trade through it. So that is where you can refine your flip within a flip. So it's like kind of like flip inception, if I may. And this is where you could catch continuation trades like this. So you can put your stop at the low here. You can be a little bit conservative, even do like a 2.5, just say 2.5 stop, and that's enough, because we essentially should not trade below this low. This should be deemed as a strong low because we're currently bullish on the M15. We're breaking internal structure highs. We're getting all the bells and whistles indicating us that we are currently long and demand is in control, so we should not be breaking lows. Until we do so, just keep trading with the momentum. Keep catching continuation. So we tap into that area here, and then price just starts to trade away from it. So we're in two positions now, and this is where you can, I would say, keep going with it. I'll do it anyway. So these internal structural lows, they're not actual swing lows, but it's enough to make minor demand and minor supply, right? So like on the second time frame, it would look a lot cleaner. You got to take it into consideration that price is fractal. Like what happens on the weekly, what happens on the monthly, it's the exact same on the 1 minute, on the 1 second, like all that jazz. So just take any of your ego out of it and just trade what you see. As you can see here, we come into this supply zone right here. Price fails to create it, so it fails to create another low, and instead it breaks up and trades through that high. So this whole range here within this leg here and that leg here, that is a whole, like that's the flip. So this is where you can just refine it somewhat. Up on this mitigation here, you can see we react to this supply here. So this is going to get really messy, I can just already tell. So just apologies. Let me just actually clean it up. No, you can deal with it. So upon this mitigation here, we have this minor supply. We tap into our mitigation, we get tagged in, we trade away. We tap into this minor supply here, fail to create, we break through that, thus creating another flip. So it just becomes flip city. And then we mitigate here. We're still trading within this price range here. So we're just accumulating orders, and then this low here breaks this minor supply area and this internal structure high. So you can just be conservative and just do that whole sell to buy candle. And if you want to be even more nitty gritty, you can just go to even that last sell to buy or use the wicks. Like, don't disregard a wick. Like even an M1 wick, or even let's just go to the 3 minute. I love 3 minute wicks. Yeah, see like this here. Boom. Like see how it just takes out these lows ever so slightly, and then we get that aggressive push up. I love a good 3 minute wick. Test it out. I'd rather take a 3 minute wick at a POI than just watch the M1 print price. I'll just happily settle in at a 3 minute wick. So try it out. As you can see here, price comes into this zone. And you can see this would be on the seconds time frame. We tap into our POI. We get a mitigation. We trade lower, thus creating minor supply. So this would be our supply, this bullish candle, this buy to sell. So that is our minor supply. We have a reaction to that minor supply. We fail to create a new low, and then we trade away from it. So this would be the change of character. So we've tapped into our POI. We've had a chock and flip. So This is going to get messy again. I'm so sorry. This will be our supply. So this is the extreme supply. Like that would be the whole thing right here, but I'm not going to do that here. We'll just use that wick. So we tap into this minor supply here. We failed to create a new low. As I was saying before, true supply market, supply should outweigh demand, right? Like it should overpower it. But considering we are currently bullish on the M15, internal structure is bullish, we're coming off high time frame mitigations, and it's just continuation city. Demand is clearly in control, so you can expect for when price to come into a strong POI, we're going to see our entry model formulate again. As you can see here, we react, we fail to create, and then we trade through that high, therefore creating the change of character and flip. And you can just literally, boom, use that last sell to buy, and just even use the high of it. You could even use the wick, whatever you want to do. And you can, if you want to be conservative, yeah, you could just put your stop below the mitigation, like the original POI. That's 1.2 stop. You could even put it here. Just go 2 pips. Like, there's no harm in 2 pips. You don't need to catch crazy R. Like, compounding is where you make your money. But yeah, look, if you can catch crazy R every single trade, kudos to you. It's not really what I look for. I'm just happy catching consistent returns day in, day out whenever I'm into the market. And that shit compounds. I'm happy with that. So that is 3 trade ideas right there. One is a 7.7, a 4.08, and practically a 4. So what's that? So just round it to 8. What is that? Let's just do it quickly. My math is awful. So 7.7 plus a 4.08 plus, what was that? 3.9. Well, that's definitely not it. It was times that shit. 7.7 plus 4.08 plus 3.9. That's just over 15.5 off within. That's like just under 4.5 hours. You've just banked 15%. Like that on a 100k account is 15 jiggers. That on a 200k account is 30 jiggers, and so on and so forth. So you just made that in 4 hours, and especially if you haven't partialed. If you partialed, well done, because that is a smart thing to do. Considering we are in a pullback, man, that's crazy what you can do, and it really is limitless. Like I can keep going and continuing following price like all the way up here, but I'm going to stop it as that, and I'll quickly just go over what we did just to kind of break it down again. Did I lose all that text? I did too. So we've gone from the daily chart. Oh, there's that dodgy tick from before. We've started from the daily chart. We've determined that structure on the daily is bearish, as you can see. It's heavily bearish. So what we are looking for is continuation trades at certain areas of supply, right? So when we go down to the H4, we are doing the same thing. Like we are currently bearish on the H4. So we are trying to catch continuation trades from relative areas of supply. And we are not there at any areas just yet. So this would be an area that I would have looked at. But considering there's no areas in sight, our price was never there yet. So once we saw the M15 change bullish, that is enough information to tell me that we have just started the pullback, and now longs can be considered. There's a lot more things to consider when trading a pullback, like targeting certain areas knowing when to be in the market and when not to. And it's like a certain level of aggression that goes into it, especially when managing a position. And I just advise, from my personal experiences, just take your profit where you can, trust your instinct, and just be patient. Even if you don't want to be in a pullback, just wait for the pro trend move. It's a lot easier, and it feels better. It's just stress-free trading. But anyway, enough rambling. So once we got the M15 change of character, you can enter positions around here. But we just were going off the M15 boss, and that's what we've got here. We labeled where our point of invalidation was, and that's not to say price could have just came down in here. Like, in my opinion, I'd rather play extreme. So if price did come down here and use this level as inducement, I would have been more confident in that. But as you can see, when price came into that level, we still had an M15 chock. So that is enough indication to me that demand is overpowering supply. And I would be trade aggressively from that POI. It did go into a range. I'm pretty sure that would have been Asian. Yeah, that's all through spread hours. So that was just an awful range. But once we have that point of invalidation of this supply zone here, we can just catch continuations all the way up. Once we mapped out this area, we had a clear and clean entry model present itself. We had, like, this is clean here, right? Like, don't disregard it. Like, it's very nice, that one. I think it's a little bit too big of a stop for me. For a pullback anyway. Like, I wouldn't mind doing like a 6 pip stop on a pro trend move. If I caught it from the extreme, I'm going to target like an H4 low. So that 6 pip stop loss is really not that much. You can still bank very, very good R off that. But I'd rather have like a tighter stop and more refined entries on the pullback. That's my opinion. As you can see, when price comes into our M15 POI, we trade through this inducement, which is a very good confluence in my opinion. That enables price. So breaking it down in like how I kind of simplified in my own terms, what that is here is when price trades through that, sell stops are triggered, stop losses are taken, and that is the counterparty liquidity entering the market, because you got to look at it as a zero-sum game. So every buyer has to be a seller, every seller has to be a buyer. So if the market makers or the big hedge funds or the banks, the people who move price, are going to be able to enter positions or enter into the market, they're going to need willing participants in the form of counterparty liquidity to be available for them to enter, if that makes sense. So there is sell stops below these lows, and that's what they needed to enter their longs to go bullish, if that makes sense. But anyway, so price comes into this mitigation. We have a reaction from this minor supply. We failed to create a new low, and in turn we trade through it, thus indicating the change of character and the supply to demand flip. And then that's when you can trade aggressively from this, because our narrative is bullish and we have formulated it correctly. And then if you didn't catch that move, you can still catch the continuations on the way up. You don't need to just close your computer and kick yourself and whinge to your missus or your boyfriend or whoever. You can still sit here and just try scope another position. It's not the end of the world. And that is exactly what we did here. We established this POI, this supply to demand flip, and then that's where we have mapped it out here. We've broken internal structure bullish. So this is our buy side of the curve. What can we expect? Price to come down, initiate the sell side of the curve into a mitigation, and then we get another entry model here where we've had M1 change of character, a reaction to supply we failed to create, and then within this whole sell to buy reaction, we actually have another minor supply to demand flip. So it's a bit of flip inception, I would call it. And that was our idea to place that trade there. And then you can just keep following it again. And then we get this other one here. I don't really need to go into too much detail again, but yeah, there's so many opportunities in the market. And like, I know this is all hindsight guru, blah, 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 blah. But just this is the only way to see consistency is you just got to go through days and weeks price action and literally just do this. Find your plan, like really work on your plan. And once you've got it, just back test the hell out of it. See what times entries are, like see what times the best move is, of whether it's New York or London, what day of the week it is, blah, 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 blah. And then just work that around you. Like you got to make sure you have trading work around your schedule. Like don't work around trading. Don't be a slave to it. Like it'll only end bad. It'll only create frustration and it will just decimate your psychology. So you need to make sure you have time for yourself and make it as simple and easy as possible. Like we're all in it for the same thing. Well, I speak for myself, but I just want freedom of time, and sitting in front of a screen for 8 hours a day is not fucking freedom in my opinion. So if I can just happily get on for a couple of hours of a night, whether it's New York or London session, and just hunt those entries, I'll catch one or two of them, or even just one of them. I'm happy. Like that on a couple of funded accounts. Like if you caught that 7R on a funded account in one night, like that's 7 jiggers in one night. Imagine that on a 400k account. That's 28 grand in one night. Like you can quit, or you don't need to quit, but you can stop for the month. Like just cruise. It's all right. But anyway, enough rambling. Hope you enjoyed the video. I'll be sure to do another one soon. And yeah, good luck.